asking ourselves what's going on here with inflation at the aggregate level. And of course, if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
Boom! There was Jay Powell and the Fed meeting, and the tendies on the Fed trade were so delicious. I'm so happy we's back. This is a great tendies day. I took some tendies. I'm gonna have more trades, but man, this is a good day. Let's talk about what Jay Powell just had to talk about. It is also coupon expiration day. It's kind of crazy day. CPI, Fed day, coupon expiration day. Check it out at meetkevin.com. Pitch out of the way, you know the drill. Email us at staff@meetkevin.com if you have questions. Let's get into what Jay Powell just said. Okay, first of all, Jay Powell gave us the usual little rug and tuggin, which you kind of get with the summary of economic projections. I think every single time we get one of these summary of economic projections, we kind of get a little bit of a rug and tuggin. We get things that are a little worse than we'd really hope for them to be. And then Jay Powell basically pours cold water on them. There were a few issues in this one. First of all, we saw the Fed funds rate projection go up to 5.1 at the end of the year. The expectation was that we'd see 2 rate cuts in this. This is only 1. We saw the dot plots really consolidate up a lot higher than where we thought they would end up being. Wasn't great. Now, Jay Powell was asked, as we expected, like, hey, well, did you put together the summary of economic projections with this morning's CPI report in mind? And he said, yes, we put it together with this morning's report in mind, but most people don't end up revising what they said after the data comes out. So in other words, this is probably a summary of economic projections that says, hey, it's probably a little more hawkish based on the first half of the year we got, and probably doesn't incorporate the good news of today. That's probably because they don't want to overreact to the euphoria of this quote-unquote welcome news, and they're keeping or sticking rather with their sort of old positioning, which is, if we didn't get this good CPI report today, maybe we'd be a little, bearish. And this is a bearish summary of economic projections. But as usual, during the presentation and Q&A session, Jay Powell did water down the impact of these, quite frankly, summaries and projections, regularly calling them just projections and that they could change, that whatever. Labor market conditions back to the eve of the pandemic. One of the good questions that I thought came out of this is, hey, are you just going to wait until the economy tanks and we start getting negative payrolls reports, or like when are you actually going to cut? And he says, look, we're cognizant of the pressures on lower income individuals, people on the fringes of the economy, the damage this is doing to smaller businesses, whatever. Which is nice to hear him say that, but it's not actually great from the point of view of getting a bullish Powell here. It's kind of like, hey, we see you're suffering. And he literally said, quote, it will be painful especially for those on the margins of the economy. So it wasn't the most encouraging Powell. I have to say, if anything, this was probably a relatively neutral Powell is how I would put it. I don't think I could cheer that this was the dove that I was really hoping for. I was hoping and expecting to get a little bit more enthusiasm out of him. We expected him to water down this sort of bearish summary of economic projections. But he made a good point over here. I'm like, hey, PCE right now is already at 2.7 on headline. Core PCE's at 2.8. You're projecting it to be the same at the end of the year. What gives? Like, you're basically saying no progress. And so we were looking at this and we're like, what the hell? And Steve Leisman from CNBC picked up on it and he's like, yo, Jay Powell, like, are you giving up on progress on inflation? And Jay Powell's sort of like, we just think we're going to lap some higher numbers. So it's not that we're not projecting other progress, but it's just that as we lap higher numbers, it's going to be harder for that number to come down more. So in other words, he's kind of reiterating that stickiness. He still sees as the economy broadly strong, the labor market back to the quote eve of the pandemic. That's an interesting kind of standard. Oh yeah, eve of the pandemic. Okay, interesting. But no greater confidence yet. Just that we had a welcomed report today. Obviously, it wasn't a great, it wasn't like, it was actually pretty great. Let's just be real about it. It was a pretty dang good report. But it wasn't something where we were able to get a super dove Fed. And it's not something that I think went as beautifully as it could have, as dovishly as it could have. Now, asked about being potentially too slow. Again, he reiterated they don't want to break things. They want to try to keep in mind what's going on. But he does say, look, it's going to suck. And really, he's asked, like, is a 25 basis point cut at the end of the year, one or two of them basically, is that really going to make a difference? And Jerome Powell acknowledges here, he goes, you'd have a really hard job if your job was to figure out the impact of a 25 basis point cut. So he basically, if I had to sum him up today, I was hoping he'd be dovish. We kind of got a, hey man, we're in a good place. We're just going to coast here until the end of 2025. And quite frankly, nothing changed. We told you in March, we're going to coast until the end of 2025, and we're going to try to get rates to about 4-ish%. And whether we have 2 rate cuts now or 1 rate cut this year or an extra one next year and one fewer this doesn't make much of a difference. So we did get a little bit of hawking there. Not great. Didn't really love that kind of Powell. Not super happy about that. Again, I was looking for some more dovishness. One rate cut not making a difference. Good to know. We did also get some we would have anticipated that already anyway. But the other thing, and I don't know how to pronounce her name correctly, Gina Smilyak, whatever. She mentioned from the New York Times, the girl who always sits next to Nick T. She mentioned, hey, it looks like you revised up your sort of target long-term federal funds rate from 2.6% to 2.8%. And it's interesting because I didn't actually notice that the first moment. I did notice when we went from 2.5 to 2.6, and I'm like, that's not great. That's not great. Now it went from 2.6 to 2.8. It's also not great. It's a way of the Fed suggesting that the neutral rate is higher. It's a little hawkish. I didn't love that at all. So not ideal here. Now, I believe that this is, as Jay Powell said, hey, these are just estimates. We don't know. Is it possible that, we're just trying to look in a crystal ball years down the road? Yes. And he did also say, keep in mind that long-term target assumes you're not going to have any shocks in the economy. But the reality is, and he says this himself, quote, we're still getting shocks in today's economy. We're still kind of like, we're like in the ocean, bobbing around. And it's not ideal. It's not great today. So not wonderful, little rough of a position to be in, not great, because the bumpiness creates uncertainty. And he's suggesting that uncertainty is implying a higher Fed neutral rate. And they're starting to kind of blend out into their projections here. I don't love hearing that much. Now, grand scheme of things, does any of this stuff really matter? Does it change my position from being about a 6.5 to 7 on the bull scale? Does it change the Nike swoosh? Does it change my positioning? No. In the grand scheme of things, this doesn't really change anything. We're going back to, are we going to stay on this trend of declining inflation? Can we continue to get good inflation reports here? The goal is obviously yes. Will we? Time will tell. So that's the issue at hand right now. Obviously, the market rallied into the J-Powell meeting and following the J-Powell meeting. The question now is, how is the market going to respond in the last 30 minutes of trade? My anticipation is this is good enough confidence to where maybe in the last 15 minutes you could see a nice little sort of buy the dip on sort of the post-Fed closeout dip that we've had here on, the Qs. You're down about 50 basis points since Jay Powell stopped talking. Could the tip keep dipping? I think it's really hard to argue that funds should be dumping and going bearish after this Jay Powell. There's nothing here that suggests anything other than Jay Powell's probably just going to take more time. Now, unfortunately, time is money. So again, was this a dovish Fed? No. Was this a hawkish Fed? I'd say it was like neutral to hawkish. If I had to put them as a 10 hawk, a 1 dove, I'd probably put them at like 6.5. So they leaned a little on the hawkish side today. And I think they're trying to project that they're so steadfast that the economy's strong, it's not falling apart yet, we don't need dramatic rate cuts, we're willing to be patient to get inflation down. As a long-term investor, does that really change anything? No. In the short term, does that soften some of the gains of the euphoric market that we've seen? Absolutely. Will people probably swoop in and buy the dip on that? Probably. We'll see. We'll see. And so I personally still maintain long thesis on Apple. I'm still obviously long exposed to NVIDIA, but shorter term here, you'll have a little bit of turbulence on a little bit more of a hawkish Fed. That said, I think going forward, you've got a lot of catalysts removed here. You've got PPI tomorrow, which remember to subscribe to the Meet Kevin Market channel. That's this one right here. Well, actually, maybe not where you're watching this video on replay, but just type into YouTube Meet Kevin Market live stream. Make sure you're subscribed to that. That's where I cover a lot of the market live stream events, unless there's some like major breaking news or whatever. Sometimes I do that live on the main channel. But then we'll try to post my summaries or sort of edited together videos on the main channel. So just keep in mind, you can subscribe to both of those. That doesn't cost you anything. Expiring coupon code today. You already know about that. So again, if I'm looking into trade for the rest of the week, as long as PPI is stable tomorrow, and I'll give you the numbers, I expect we're probably just slowly going to continue to trickle up. Nice and slowly. Some sectors where you're going to get AI pricing, you might get some bigger pops. PPI tomorrow, we're looking for final demand at 0.1%, down from the 0.5 of the prior month. PPI X food and energy looking for 0.3, X food, energy, and trade looking for 0.3 as well. So we'll see what happens tomorrow. I'll be covering it live the next day. So that's tomorrow at 5:30 a.m. On Friday, we'll get import-export prices and the University of Michigan Consumer Sentiment Report. So with that said, thank you all so very much for being here. Let's go ahead and play the disclaimer. And remember to go to meetkevin.com to learn more about those courses on building your wealth. Remember, past performance does not guarantee future results. You could join and you could lose lots of money. Obviously, my hope is that you can learn and make lots of money. Let's play the outro. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Yeah, see that sell down? You're hitting the bottom. You're already knocking on the door of the bottom. So you got Tesla kind of knocking on the door of the bottom there. NVIDIA's trying to. Microsoft. So everything sold down after the meeting, which is really interesting. But it looks like you're trying to create a bottom here. No guarantees. It looks like you're trying to form a bottom on a lot of different indicators here. We'll see if Bitcoin can end up holding that bottom there as well. But it looks like the big sell-off now might be behind us after those comments. And oftentimes, no guarantees, that can lead into a push into the close, or people are going to take profits. I have no idea, but we'll see. Overall, bullish on the economy until we really start getting some bad jobs data, but I'm very watchful of that. That's why I'm a 6.5 on the bull scale as opposed to like a 9 or 10. I still think there are large risks in that labor market. Anyway, thank you so very much for being here. We'll see you in the next one. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.